Hello, hello, everyone. Thank you guys so much for tuning in. If you have the opportunity to tune in with us tonight, we are going to do something especially for our business owners. And just excuse me if I'm looking down because I am trying to make sure that this information gets shared out to the right groups of people. But we're doing something special for business owners and just people in general. We're going to discuss tax tips to wrap up the year. So if you guys are here, then you will have the opportunity to tune in with us and get some really good information. If you give me just 1 minute, I'm going to make sure that it's shared out to the appropriate Facebook groups, especially the Launch, Grow, and Profit group, because I really want you guys as entrepreneurs and business owners to be able to know just some things that you may want to consider as we are getting towards the end of the year. So give just a minute here and we'll share this video out and then we'll get started and I'll introduce our special guest that's here with us tonight. Let's see here. Okay. And one is shared. And then we're going to share again. And Casey, I don't know if you have any groups that you'd like to share with, but if you do, you're welcome to do that as well.
Okay.
All right, so we're sharing. That's one. And here goes another one. All right, so that is official. We have officially shared. I believe we have. Okay, yes, we have officially shared. So we can go ahead and get started. So again, for those of you who don't know me, my name is Tanya Edwards. I am your business consultant and success coach and strategist, and also an entrepreneur. Right now, we're going to talk about tax tips to wrap up the year. And we have special guest, Cassie Williams from the Cassie Williams Company joining us tonight. Cassie is an accountant, and I have had the privilege of using her services starting last year and again this year. And I was very pleased with the service that was provided to me and our company. And I just wanted to be able to share with you guys. I've had quite a few of you as entrepreneurs to reach out and ask for information when it comes to bookkeeping, accounting, different tax savings. And I am not a tax expert. I'm not an accountant. But I want to make sure that you guys get the right information. And so we're just going to cover just a few tips for you all to wrap up the year. And if you have any questions, go ahead and drop those in the comments. If you have anything you'd like to ask, make sure you get that out because now is the time. There's no better time than the present. So without further ado, we will go ahead and get started. Casey?
Thank you. I'm going to talk about a few different tips that you can take advantage of now that will help you when it comes to tax time, because we all love tax time, right? Okay, actually, no, very few people like tax time, but I want you to be prepared and feel like you have a handle on where you are in your business when it comes to your taxes and your books. So I have worked on both sides of that desk. I have worked as an employee. I was a business analyst, so I worked with the IRS, working on regulations and specifications for different softwares. I did that for a number of years. I have owned multiple businesses. In fact, my husband and I right now, we have 5 businesses. We just got a new business just a couple days ago. And so we have 5 businesses. And I have been the accountant. I've been in accounting for 20 some years. So I like that numbers provide the story. Numbers provide the detail that you need to help you make decisions in your business. That's the purpose of doing your bookkeeping. So I have a few tips, like 5, to give to you so that you can have comfort in your numbers. First is get current with your books. So that means they should be categorized. You should be reconciling your checking account, your savings account, your credit cards that you use for business. Review those and make sure that the charges on there are actually current charges. They're supposed to be on there. I have had clients in the past where they actually save money by going through this process, because you get this new software that has more bells and whistles on it than the old software. You're so excited to get started with it. You jump right in, you get going, and then you forget to shut the old one off.
Wow.
It happens a lot. So now you're paying for 2 softwares. It happens a lot in calendars. When you set up a new calendar software, you set up all of your appointment types and you're so excited to use it. Make sure you get all your links changed over, but you want to make sure that you don't forget something so you don't shut the old one off right away. And then pretty soon, 3 or 4 months later, you're still paying for the old software and you're not even using it. Wow. So it happens in CRMs as well. So you want to make sure that you are looking through, at least spot checking, to make sure that those statements are correct. If you're not doing it, you need to have some communication with the person that is. So if you have a bookkeeper, you want to make sure that you have some communication throughout the months and throughout the quarters to make sure that your books are current, that you're getting information, you're getting reports. When you get those reports, you actually do need to look at them. I had a client that had a bookkeeper giving reports to him every month. And he was looking at the profit and loss statement, but the balance sheet wasn't changing. And he didn't know, either he didn't look at it or he didn't know enough to ask questions about it. And it wasn't right. And so he got to the end of the year, ended up in an audit, and it cost him several $100,000 in fees and penalties because he wasn't paying attention. And you can hire all the best people in the world, but your books are your responsibility when it comes right down to it. So you need to make sure that you're at least looking at things that you're receiving if you're not doing it yourself.
Wow, awesome.
Then the next tip that I have for you is you need to commit to being current. So you can get current in your books, but if you don't stay current, you're missing the benefit of doing bookkeeping. So if you commit, you can set a reminder, put a note on your calendar, block out some time so that you can do it once a month. I would say about the 5th of the new month, that's when you should be doing your bookkeeping. So if you sit down on your calendar and you block out the 5th of the new month and you go through your statements from last month, it'll really only take you about an hour. And then your books are current. You know where you are. You've reviewed. You're good, ready to go on to the next month. Now, in the beginning, it'll probably take you more than an hour, but after you get into a rhythm, it's not so bad. And then you don't have that fear of the unknown. You don't have the fear of, I don't have a clue, because you're at least in it enough that you're comfortable with it, or you get to the point you're comfortable with it. My next tip for you is to get organized. Receipts. We get receipts as a business owner from 100 different places, it feels like. We get them in our email. We get them in our mailbox. We get them electronically. We get them through PayPal. We get them all over the place. But it really comes down to we get them 2 different ways. We get them electronically or we get them in the paper form. So if you get a receipt, what do you do with it? If you're in the technology age, you can take a picture of it. Now, if you're using QuickBooks or Xero or any of those softwares, there are apps that go with those. You can take a picture with your phone, load it right into your software. or you can take a picture of it with your phone and email it to either yourself or to a bookkeeper. When I get a receipt in my email, I have a folder inside my inbox called receipts, and I slide them into that folder. And then the first of the new year, I go into that folder and I make a folder, a subfolder called 2018, and everything goes into that folder. If I need a receipt, I have it. I can go back years and years for receipts in that folder because I just have a 2018, a 2017, a 2016 receipts from all of my years in business in that folder. They're in chronological order. So if you need to go find them, they're right there for you.
Let me ask a quick question when it comes to receipts. So does the dollar amount of the receipt matter? Are we talking, the $3 cup of coffee? Are we talking $200 and $300 expenditures?
If you get audited by the IRS and you do not have a receipt, they will exclude every purchase that you don't have a receipt for. Okay. So if you go to the post office and you spend $4, I would say that receipt. If you go to get a cup of coffee because you had a meeting with someone else, I would put their name on the top of it, put why you met with them, and then I take a picture of it. We have a lot of clients that are in the real estate industry, and so they will put an address at the top or a house number at the top. Awesome. And then they take a picture of it and they send it to us. And so I get receipts all day in my email, and I slide them into client folders all the time. And then at the end of the month, I have their receipts, or the end of the year. I have clients that they get them in the mail and they'll mail me a package. I've got 2 packages today from 2 different clients from California. They mailed me an envelope of receipts from last month. And awesome. I get receipts all the time. And so if you're not into the picture taking, you can make a copy, because those receipts that you go to Office Depot or you go to Walmart, you buy supplies, or if you have a lot of fuel tickets. I have some clients that are in transportation, and so they have a lot of fuel tickets. That paper is thermal. So if it gets too cold or too hot, the ink is going to disappear. So it sits in that file cabinet. In 3 years' time, you have a blank white sheet of paper. It's not going to help you. So take a picture of it or make a photocopy of it right away. And then you have that receipt. You have a physical copy of that receipt. I have clients that do that as well. So they don't do electronic. In fact, my husband's business, he has a mechanic shop, and he doesn't do electronic. And so he puts them in a basket, and then when the basket gets full, he brings the basket home. So about once a month, he brings the basket home, and I put them in a folder. I just put them in a big folder. It's a big one, but like this.
Okay.
And just in a like a 8.5 by 11 folder, and then I just write the month and the year on the folder, and I stick it in the file cabinet. And I have that folder forever. But he makes the copies of the receipts at the office, or at the shop. And so it's just copies of receipts, and I just stick it in the folder, and we have it by month we go back 7 years. And then after 7 years, you can pitch them because they're no longer any good. Most of the time, if you're going to be audited, you can go back 3 years. Now, we have had to go back further than that because my husband does a lot of transmissions. And so sometimes we've had to go back further than that for like a warranty on a part or something. But for the most part, you're probably not going to go back more than a year on a receipt unless you're going back for an audit. I know we had a scanner that I took a picture of the receipt, and that scanner, we loved that scanner here in the office. It was a little portable scanner. And so when it quit, I wanted to know, how long have we had it? Have we had it long enough that I want to replace it with the same thing? Or do I want to go get something else? So there's all kinds of reasons why you would want to have the receipt, not just for tax purposes. I mean, sometimes it's for business purposes that you want a receipt. How much should we charge this client? How much do we charge this client because we had an expense and I need to reimburse myself from the client? So you need to have that receipt. So there's all kinds of reasons why you need to keep your receipts, and you need to keep them organized. When I save receipts electronically here in the office and we scan them, we name them with the year the month, the day, all together, and then what it is. So we will name it 2018-11-02. And then if I were at Office Depot, I'd put Office Supplies or Office Depot on the receipt or on the line as a file name. So when I'm scanning down through there looking for something, I can find it and they're in order.
Awesome.
You put them year, month, day, they're in order. We do our bank statements that way. We do our credit card statements that way for our files and for our clients' files.
Wow.
So it makes stuff real easy to find if you can get a system together.
Okay.
Okay. So that's my get organized. My next tip is create a budget. Now, when we say budget, some people think of we have to do coupons and we have to do the dollar menu and we have to, budgets don't have to be that way, I promise, especially in business. No, there's a reason why we say create a budget. And it's not so you can save money, although it will help you to save money. Exactly. The reason that you want a budget is because if you are measuring your numbers, you're managing your numbers. So if you look at your phone bill and you say your phone bill is $385 this month, and then you're going along and pretty soon it's $600 because you're watching it to a number every month, you're catching that. Your child went out and bought all these iPhone apps on their phone and holy cow, your bill is so much. Or maybe you bought a different phone and you traded out phones. So maybe it's a legitimate increase. But if you're watching the numbers, you're comparing. So I create a spreadsheet because I like spreadsheets. And I have a column that is for budget. And so I have on my budget list my income numbers. And then at the bottom of that section, I have expense numbers. So at the top, I have bookkeeping services, tax services, book sales, speaking engagements, and consulting or whatever else I have for income. Those are all of my income categories. So services, products that you sell, anything like that, is income. And then at the bottom, I have my advertising and marketing I put together, my utilities, so I have telephone, electric, all those office-y type expenses that you have for your business, office supplies, I don't know what else you'd put in there, but all of those expenses that you have for your business, you're going to list out. And if it's an Excel spreadsheet, you can just add to it as you need to. So if you're adding to it, and then pretty soon you say, okay, so in the first column, I put budget. So I budget $50 a month for office supplies. Now, there are some months where I don't order any office supplies. I have an accounting firm. And so July, we don't usually order office supplies at all. August, sometimes we do, sometimes we don't. We get to October, and we start ordering a lot of office supplies because October, November, and December, we're ramping up for tax season.
Yes.
Because January, February, and March, we don't order we don't order office supplies because we're busy. We don't want to have to mess with it. So I don't necessarily use that $50 every month, but I know that I'm allocating that $50 to later in the year. So I have my numbers as my budget. And then as I'm doing my bank reconciliation, part of my bank process at the end of the month is to go through and plug in what the actual numbers are. Now I use QuickBooks, and so I have mine listed right out like they are on my profit and loss statement. And so I just have to key them right down the list. So I do that for each month. Then I know how close I am. So let's say that you get to September and your education expense is, which would be all those courses and classes that you buy all year. Yes. Your education expense is $8,000 over budget.
Wow.
Well, that means you either need to, I've had that happen with clients before. So that means you either need to stop for the year or you need to increase your income to account for the difference.
Yes.
So if you're watching those numbers throughout the year, you're not going to get to September and be $8,000 over budget. You might be $1,000 over budget because you really, really, really wanted this course. And you said to yourself, I'm not buying a course in November, so I'm going to use my October and my November budget now.
Mm-hmm.
And that happens, but you logically made that choice. So if you're watching your numbers, you're helping yourself. You're being more diligent about your purchases. Because we own a business, we as business owners seem to think that is our free-for-all card to go buy anything that we want to because we own a business. Oh, it's a business expense. Great, it is. You're right. But that doesn't mean that you have money to pay for it or you have a need to have it.
I want to ask a question here as well. Could you kind of touch, because I had a client call earlier this week and we were talking and she's using her business account and her personal account together. So she just kind of swipes for whatever she needs. There's no separation. So could you kind of touch on that a little bit?
I will. Yes, that's actually, okay. Yes, I will talk about that. Okay. So as a business owner, it is your responsibility to separate business from personal. So when you open a business, whether it be a sole proprietor, an LLC, an S Corp, I don't care what the business entity is, you need a separate account. Now, if you have a sole proprietor business, you are not going to be able to go to the bank and open a business account necessarily because a lot of banks want articles of organization and an EIN number or a federal identification number. And if you're a sole proprietor, you may not have that. But you can have a separate checking account, even if it's a personal checking account, and only use it for business purposes. When I go to the bank, we have 18 accounts in our login at the bank. Because we have one for each business. Yes. Our kids all have one. We have personal ones. So it's not uncommon to have multiple accounts, but you have to be diligent in your wallet to pull out the right card for the right purchase. So if you're at the gas station and you don't drive that vehicle for business purposes, that's a personal expense. If you are at the gas station and you do drive that vehicle for business purposes and it's your own vehicle, it's a personal expense. So you take the mileage, but the gas is personal. Now, my husband drives all year and uses his truck for business. We own the truck personally, but he pays for all of his gas through the business account all year. And he is consistent about that. And that's the key, is you need to be consistent. Mm-hmm. So he pays for gas through his business account. And then at the end of the year, I have two business accounts or two expense accounts in his QuickBooks. So I have one that says car and truck. And so that's where we put gas, oil changes, tires, any of that kind of stuff that we use for the truck. That's where that goes. Now, if he goes on an airplane trip to pick up parts or do whatever he does, that's travel. Okay, there's a difference. So his car and truck is for car and truck only expenses. Travel is for Uber or airfare or hotels or that kind of stuff. That's travel. Now, at the end of the year, I track his mileage. So every Monday, he sends me a text message with what his odometer reading is. And I write it down on a spreadsheet. And I keep track of his odometer reading for the whole year. We subtract out his commute miles, and everything else that he drives is a business mile. Now, I have that spreadsheet. I could produce it to the IRS if I needed to. And that's the key. If you're going to track mileage, you have to be able to produce that spreadsheet. And so if you use MileIQ, it will produce that spreadsheet for you. It's a report in MileIQ, and it'll give you at the end of the year, you give it to your accountant, and they will love you. So you print out this report, and then you get to take 55.5, I think it's 53.5 cents a mile this year. Mm-hmm. It changes every year, but it's about 55 cents a mile. Last year, his mileage was $12,000. So I
Awesome.
took out his $7,000 that he spent in gas, and I
Mhm.
plugged in his $12,000 that he gets to take for mileage, because you get one or the other, you don't get both. And we got to write off $12,000 in mileage because we track his miles every Monday.
And let
But
me ask you a question.
yes,
Okay, you said his mileage was $12,000. So just to give like a visual, how much driving does he do? Is it just around town, or is it long distance driving? Like, is that a lot of mileage?
that is a lot of mileage. That is. We drive, we own a mechanic shop, and so he will go pick up parts, and sometimes he'll go 2 hours to pick up parts,
Okay.
a 2 hour drive to pick up parts. So 12,000 is probably the high end of that.
Mhm.
About 15,000 miles is an average person's drive for the year. So, and that's total miles, personal and business. Okay.
Mhm.
So, but back to the original part of that was to track your business from your personal. So if you're going to the grocery store, that's a personal expense. If you're
Mhm.
going to Walmart, you should have 2 tickets when you leave Walmart, 2 receipts. One is your office supply stuff that you bought, or your whatever officey business types expenses, and the other would be your personal. Or if
Mhm.
you don't do that, you should at least write on the receipt what is what, so that you can track that. But it's easiest and cleanest if you can do 2 receipts. Do 2 orders, one for your business stuff, use your business card, one for your personal stuff, and use your personal card.
Awesome.
Okay? So yes, it's very important that you separate business from personal, especially if you have an LLC. If you have an LLC, it's kind of like you take this umbrella and you put it down over the top of your business, and you're protected legally. If you use personal for business and business for personal, every time you do that, you like shoot holes in your umbrella. Pretty soon, your umbrella isn't worth having, because it's not going to hold any rain out, nor is it going to hold any lawyers out or any lawsuits out, because you have what we call pierced the veil of your LLC. So it pays you no good to have that. So if you keep your personal separate from your business, you protect yourself from all of that. Okay?
Awesome.
Okay. My last tip for you today is to pay yourself. I choose to pay myself first. So when a client pays me at the end of the week on Friday afternoon, I sit down and I look and see how much money I brought in this week. Not how much I billed, how much I brought in. How much has actually been deposited into my business account. So let's say that I had $2,000 come into my account. Okay, so I got paid $2,000 this week. How much of that I'm going to take for me personally? Now, when it was a side hustle and I was pulling in a W-2, I took like 30%. Now that it's my full-time business, I take like 50%. So I would transfer or pay myself $1,000. So I take $1,000 and I transfer that into my personal account, which helps me to keep my personal separate from my business, because now I have money in my personal account to go to the grocery store, to pay the insurance, to pay my car payment. And I have money in my business to pay for my calendar and my CRM and my QuickBooks and all that other stuff that I pay for in my business.
Mm-hmm.
Because I've chosen to budget and separate my money. Now, if you pay yourself, if you're an S Corp, that gets a little more complicated, because as an S Corp, you should pay yourself a wage, because that's part of your, when you sign up for an S Corp, you're saying, I'm going to pay myself a wage. Now, when should you become an S Corp? At about the $50,000 mark. So when you're making about $50,000 in your business, it is a tax advantage for you to become an S Corp. You can elect an S Corp now for 2019. So it's one form. It's a 2845 or something like that. But if you go to the IRS website and you just type in S Corp election, it will automatically take you to that page. It's a very simple form. You can do it yourself. You don't have to have anything major. You do have to be an LLC in order to make that S Corp election. So if you're not an LLC, you need to become an LLC first. So say you're a sole proprietor, you need to become an LLC. Then from the LLC, you can become an S Corp. Now, if you are a sole proprietor and you're going to be an LLC, I do suggest that you get some help with that one. Moving from an LLC to an S Corp, you can probably do on your own. Your tax person or your bookkeeper can help you with that if you have questions about it, but it's a fairly simple form. One pager, sign at the bottom, mail it to the IRS. So the benefits of an S Corp: you save on self-employment tax. You get to write off the employer side of your payroll tax. The downside of an S Corp is it's an extra tax return. So you're paying for 2 tax returns, which is why we say the $50,000 mark, because you have to have enough profits and enough money coming in from the business in order to make it beneficial to be an S Corp, because you do have some expense with that. You also have to pay yourself. Paying yourself costs a little bit of money in taxes, in the fee to process that, and you have to transfer the money from your business to your personal account, which helps you to budget your money, to keep your money separate from business and personal. And if you're going to pay yourself, I would say 50%. So if you're going to pay yourself, let's go back to that $2,000 example. You brought in $2,000, you're going to pay yourself, so you're going to pay yourself half. So we're going to pay ourselves $500, and we're going to transfer $500. Now, that means I took a $500 distribution out of my business, and I took a $500 paycheck. So I'm still getting my $1,000, but I took $500 of it as a transfer, which is called a distribution. I didn't pay payroll tax on that money. And I took $500 as a paycheck. So I did pay payroll tax on that money. So I put money into Social Security. I am saving for my retirement. I satisfied my requirement to be an S Corp by paying myself a payroll check. And I got $500 that I didn't have to pay self-employment taxes on. So you get the best of both worlds when you split it. A tax advantage that way. Mm-hmm. So then you can take your paycheck, and so then you get a paycheck. So it helps you to budget your personal life as well as your business life. And I do everything in my business in percentages, because when we're a business owner, it's not like you work 40 hours a week and you get a 40-hour paycheck.
Yeah.
It's not like that. Some weeks you're going to make $5,000, and some weeks you might make $500 if you're lucky. So we can't guarantee that we're going to have that money every paycheck like you do when you go clock in and clock out when you're working for someone else. So I do everything in a percentage. So if I'm going to take a percentage at the end of the week, I take the percentage. Now, if it was a slow week, let's say we only made $500 this week. I can't take 50% of that and my business be able to pay all its bills. So maybe I can only take 30% this week. So just because you're taking a percentage doesn't mean you can't fluctuate that percentage. You can adjust that percentage based on your income. Now, when you get to the point where I had a client today, she sent me a message. She has a client paying her $18,000 on Monday. Well, she's probably not going to take 50% of that as her pay next week, because that's a lot of pay. But she might, the last 2 weeks, maybe she's only taken 30%. So maybe she takes 50%, maybe she takes 20%. So you kind of have to use your judgment when it comes to transferring money based on what your averages are, what you know you have coming in. But I do caution you, don't count your chickens before they're hatched. You don't want to be banking on money coming in and it not happen, or it not happen that timing that you want it to. So that's why I always wait till Friday and I look at what came in this week. I look at what actually was deposited into my account, because it's the first of the month. I billed out a whole lot this week, but I didn't collect a whole lot this week because some of my clients won't pay me till Monday. But so I took out what the percentage what actually was in my bank account this week, which also will help you to watch your bank account and to watch your statements and watch your numbers, because you're looking at it every week because you want a paycheck, or you should want a paycheck, so that you can help yourself to keep your finances separate. So those are my 5 tips. Get organized with your books, get your books current, commit to keeping them current, work off of a budget, and keep your money separate and pay yourself.
Awesome. Casey, I think that was some really, really great information, especially for those of us who may not have gotten to the point of having an accountant or even bookkeeping just yet. Some people aren't even using QuickBooks right now because they're new to entrepreneurship and they really just don't know what they need to do. But I think that these tips, not even just for the end of the year, but in general will help them as they go through the year. So guys, if you aren't doing some of the things that Casey has mentioned to you tonight, then now is the time for you to start putting those things in practice and begin to change your mindset and think about, do you really want to have a business, or do you want this just to be a side hustle? There are different ways that you handle your business as opposed to handling a side hustle or an expensive hobby, like we like to call it. So you guys heard it straight from an accountant herself, Cassie Williams of the Cassie Williams Company. If you have any questions or anything you'd like to hear going further, just go ahead and let us know, and I'll make sure to get that information out to you guys. Thank you guys so much. Cassie, thank you so much for joining us. Do you have a website that you'd like to leave in case someone wants to get in touch with you?
I sure do. It's called the Cassie, it's CassieLWilliams.com is my website.
And I'll drop it here for anybody who'd like to get in touch with you. That's Casey's website. So if you have a question or if you're looking for someone to assist you with your accounting and your business taxes, then go right ahead and reach out to Casey. Or even if you just have some basic questions, reach out to her, schedule an appointment or a consultation with her, and she'll be able to assist you guys going forward. Or you can reach out to me and I'll make sure and give you guys the connection. So again, thank you all so much for joining us. Again, my name is Tanya Edwards, Biz Startup Boss, and we have tonight with us Cassie Williams of the Cassie Williams Company. We will see you guys another time. Bye-bye.